It was a wild day for silver's price, but we got there, $48 an ounce. But what happened after that is quite interesting, and I believe now, given the volatility, we could continue to see it march north of $48 again. Let's discuss it as we explore. That's right, we're seeing a pullback in silver's price moments before the markets close. In fact, all the precious metals suffered today, save for platinum. It actually climbed a bit here. We're going to get into those prices in a moment, but first I want to remind you, channel sponsor Summit Metals, next time your budget allows, check out Summit Metals, see if they have what you're looking for there in terms of gold and silver and platinum bullion now. You can buy your precious metals there and sell them to them as well. So check them out. Link is in the description below. Now, what's going on here today? Well, moments before the markets close, this is where we stand. Gold is down $8.90, just almost a half a percentage point down, or a quarter of a percentage point down, to $3,857.90. It got within $2.30 of $3,900 today. Silver is now at $47 an ounce, down 0.78%, down 37 cents on the day. But here's where it gets crazy. It got down as low as $45.88 after climbing to $48.09. Wow, that's about a $2 and change move in one day difference there. It was quite a wild day for sure. And it is remarkable to see silver now recapture that $47 mark in the ask price. But remember, the bid price, there's 12 cents worth of difference between the bid and ask price, and it's below 47 in the bid price. But it was something. So what's going on here? Well, it's remarkable. We can see that both gold and silver retreating from the peaks as U.S. jobs data blackout extends uncertainties, and people are taking profits right now. And we're going to talk a little bit about gold as well in this video. So we're going to put some gold in here so you can kind of see what we're dealing with. But remarkable indeed to see the movement of both gold and silver prices today. But gold is sort of acting, in a sense, as a more stable store of value compared to silver, at least in its movements today. But I still think there's a lot of room for gold to improve in the coming months ahead. And I'm going to be talking about that in a different video. Now, we know that they're the ultimate safe haven, gold and silver are, in times of economic turmoil, and experiencing a significant retreat from their recent achieved record highs. The downturn is directly attributed to the prolonged blackout of official U.S. jobs data, critical economic indicator caused by an ongoing government shutdown. While the initial reaction to the data vacuum saw gold and silver prices surge to unprecedented levels as investors flocked to safety, the extended period of uncertainty and the absence of clear economic signals have now triggered a wave of profit-taking and a recalibration of market sentiment, leading to a notable decline from those peaks. But remember, nothing really has changed here. It just goes to show you how psychology is playing a role here. And likely, probably, things are probably headed in the direction where the gold and silver should continue to climb up. Now, the current market volatility stems from a protracted U.S. government shutdown, which has halted the operation of non-essential federal agencies, including the Bureau of Labor Statistics. This crucial industry agency is responsible for releasing the highly anticipated monthly jobs report, including non-farm payrolls, a cornerstone of assessing the health of the American economy and guiding the Federal Reserve's monetary policy decisions. The absence of these vital data has plunged financial markets into a state of heightened uncertainty. Initially, the market's reaction was a classic flight to safety. As the shutdowns commenced and the data blackout loomed, investors sought refuge in gold and silver, driving their prices to historic highs. And we saw it, a surge past $3,800 an ounce for gold, nearing $3,900, and silver climbed to a 14-year high, and it reached $48 today. The initial rally was fueled by fears of economic instability, a weakening U.S. dollar, and reinforced expectations that the Federal Reserve would be compelled to cut interest rates to support an economy operating without clear data. Traders reportedly priced in a very high chance of a rate cut at the upcoming Fed meetings. Now, I don't think much has changed. I think likely some of those numbers that we're going to get from the BLS are probably going to be relatively good for a rate cut. In other words, not nearly as many jobs created, maybe even some job cuts. In fact, with the shutdown, the Trump administration very well may take the opportunity to cut up to maybe thousands of jobs from what are known as non-essential workers in the government. And so we'll see how this plays out. But likely, probably, my guess is they may reach a deal beforehand. I think some are suspecting that they are going to do that. They're going to reach a deal, and it won't last the 30-some-odd days that it did last time it had occurred. But we'll see. But and without official metrics, markets became increasingly reliant on alternative, less comprehensive data sources like the ADP National Employment Report. But I'll say, the ADP National Employment Report may not be as comprehensive, but some people feel it's more accurate. As a Bureau of Labor Statistics, well, we call them the chefs at the Cook the Books Club. And we've seen that as the biggest revisions downward of jobs numbers from supposedly more comprehensive data. So I think the ADP report is going to be probably something that's going to be a little bit more reliable, or have shown to be more reliable. Any signals from these alternative reports, or simply the growing realization of the economic drag caused by the shutdown, began to tamper the bullish sentiment, leading to the current decline from record highs. But I think this is going to be temporary. In fact, though the prices dropped, we're starting to see them creep back up and recapture some of the losses. Hence why the wild movements, the wild day that we had with silver, and as well gold. In fact, we're looking now at silver, creeping back up. Now it's 47.02, and likely, I think probably we're going to see some of that. But the profit taking is something that is normal, and we're going to see that happen. I think probably would have happened sooner at some point in time anyway, regardless of the shutdown situation. And by the way, if the government opens back up again, I still think gold and silver are going to do quite well. In fact, this is a piece from Jim Wyckoff over at Kitco. The price is sharply lower as U.S. trading as heavy but not unexpected profit-taking from recent gains that pushed gold futures to a record high and silver to a 14-year high earlier today. A rally in the U.S. dollar index and lower crude prices today are bearish daily outside market elements for the two metals. So looking at it from a little different standpoint here, not just with regards to the shutdown and the lack of data. In fact, yes, U.S. dollar index is up slightly. It's up to 97.87, a 0.15% increase there. I can find no fresh major fundamental news to account for today's sell-offs in gold and silver. Today's big outside days down to gold and silver futures, whereby today's highs are higher and today's lows are lower than yesterday's daily trading ranges, do qualify as bearish key reversals, and so down on the daily charts. These are early technical clues that market tops are now in place. The government shutdown has ended its second day, and the Trump administration is raising the stakes by halting $18 billion in infrastructure funding and signaling an unwillingness to fire thousands of federal workers. The administrative moves have suggested a hardening of positions, which could require one side to make bigger concessions to get the federal government back to work. And some Republicans have expressed concerns that the strategy could backfire. According to a Bloomberg report, the shutdown could have significant economic impacts, with the Congressional Budget Office estimating a cost of $400 million per day in lost compensation, and some economists warning that mass firings could stop corporate financial and reduce capital investments, according to Bloomberg. The shutdown is prompting some risk aversion in some of the marketplace, even though the U.S. stock index has hit record highs overnight. But remember, some of these institutions, Bloomberg and the like, they put too much faith in government. The world's not going to end with this shutdown. Yes, there are some problems, obviously, and going to be long term, but most employees will get back pay once it ends, and likely it's not going to last too long, especially with what has been talked about, what I mentioned earlier, to bring both parties back to the negotiating table. But regardless, that's where we stand. And I think that the long-term situation in terms of a shutdown, well, look what happened last time. It was the longest ever during Trump's first term. The economy boomed, and so I think in a sense, likely it could be a good thing, especially if we cut some of these unneeded government agencies. Their Doge has just hit the tip of the iceberg with what needs to be cut. We cannot afford most of what we're doing right now. We just can't. And that includes across all government agencies, including the Department of War. And I think most of us would agree about that. So there it is. So fascinating indeed. I like to give you the latest news and analysis in the world of precious metals and market moves like what we saw today. But the long-term proposition and fundamentals remain in place. Gold and silver will preserve your wealth. And that is really what we can hope for the long term, even though this year in 2025, they have turned out to be very good investments. That's not how you should view them long term. So if you're just beginning to stack gold and silver, well, I hope you will take that to heart, because through the course of history, the gold and silver have barely kept up with inflation, especially silver. Gold more so, but nowadays we're in exceptional times with gold and silver for sure. Let me know what your thoughts are in the comment section down below. I'd like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.